The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shiven in Boston. Shiven, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. Tom is traveling today, and will be back with us tomorrow. I think he is in flight now. So right now we've got the Dow up 45 points, S&P negative, down 1 point, about 2 points. We're going to take a look at the S&P. If you were tuned into the 9 o'clock show that I do here, as I kick things off for TFNN each and every morning, what we were looking at was A to B equals CD pattern that was completing, gave us the signal that you wanted to sell that D point out there if you were an intraday trader, and we'll take a look at that. You've got the composite off 8. That is certainly because of Apple. Apple trading down $27 now, off 4.5%. The Russell 2000 up a point. Right now, Microsoft is up 10 ticks, Intel up 32, Google up $1.56. If we take a look at the commodities out here quickly, you got gold trading up $24 right now, out at 1,600. We'll take a look at gold, silver as well. You've got silver up 35 cents, dollar, King dollar pulling back 26 ticks right now. Over in Germany, they're giving up their gains here. They're down they're up 21 points right now. The FTSE up probably will go red here shortly. Around Asia last night, you had the DAX. You had the Nikkei off 122 points. The Shanghai was off 10, and the Hang Seng down 25 points as well. So let's quickly go take a look here at the A to B equals CD pattern that was setting up here on the ES Mini. And you want to learn how to buy and sell the D point, folks. It is absolutely the most consistent pattern that is out there. You want to become a master of that C to D leg. So just to recap, and just in case you didn't tune in on the 9 o'clock show, and that's why you really want to be able to, maybe you don't trade the futures, but if you do charting, what you want to make sure is you've got access to futures and that you can do the A to B equals CD patterns out there, because you can watch CNBC and catch all the news, but where the real metal hits the road, or the rubber hits the road, is going to be here and taking a look at the futures contract. So what the futures contract did is as follows. It made an A to B equals CD on the way up. That A to B equals CD, the A point on that is at 9:30 in the morning at 13:21.25. That's your A point. Your B point happens to be a little shooting star that came in at midnight. That's a beautiful thing. That's good timing out there. When it reached a high of 13.28, pulls back. If you take a look at the pullback there, take a look at the retracement. If you go from your A to your B, you'll see that the type of retracement was a shallow replacement. Shallow retracement meaning 0.382. There's 3 areas that you want to be able to have on your toolbox, or in your toolbox. 0.382, 0.618, 0.786. Does a 0.382 retracement? What's that tell you? Going to do more than a 1-to-1 A to B equals CD. You let the candles point the way. The candles will absolutely tell you. Why will the candles tell you? Because the candles are nothing more than the emotion of the traders. They are leading indicators. They're absolutely going to give you the signal that you want. If you take a look at my formation tool here, I take a look at all the different levels along the way up. I'm taking a look at 1-to-1. That's your D point here. That's what oftentimes we just kind of refer to as a D point. But that's really your D point can be anywhere along that C to D leg. But it can't just be anywhere. It's going to be in that 1-to-1, 1-to-1.272, 1-to-1.618, 1-to-2, 1-to-2.618, and every now and then you get a little bit of apple pie. You're not getting apple pie here this morning. If you're holding on to apple, you're getting some apples taken out of your pie, if you will. Now, when we take a look at the ES Mini here, what the ES Mini did as it got up to the price point of 1340, another shooting star, that got up to the 0.786 area. I'm going to go ahead and erase stuff off the screen here. You also got a confirmation with a bearish engulfing on that next candle as we came into 930. So now what you have, Because we don't have an A to B equals CD set up. What you can do is you just simply go from your low to your high and identify the likely area where it will pull back to. Where would that be? Which retracement level are you normally going to see? 0.618, exactly. And so if we go from the low being 1321 and a quarter, up to the high 1340, you can see how the ES Mini has pulled back to that 0.382 level. It's trading right now at that 0.382 level. 1328.41 really being your next target. But what the ES Mini will likely do here is set up an A to B equals CD down. And that's on the 30-minute chart out there. We go take a look at some of the other stocks out here. Let's go take a look at Intuitive Surgical. Intuitive Surgical popping up today. ISRG out there. I believe that Intuitive Surgical has had nothing but institutional sellers in there. So if you are a buyer, you don't want to be in front of this thing. It's up 2% today. That's up $10. So it's trading out at 482. Really doing nothing other than coming back up against its last gap up from July 23rd. That high was 485.64. It got up to 485.95, and so far trading a bit lower. Let's go take a look at Panera Bread. They're having a nice morning. They're up 5.6%. Let's see how it is handling its early gains. And what we are seeing with Panera Bread, having a nice pop, coming into a supply line and doing what, folks? Giving it up. So now trading at its session lows, gaps up there, not what you would see in a bullish market. You know, Panera Bread coming out with some nice earnings, and what Panera Bread was doing was really going into the February 8th supply line. The low on that supply line, 147.92, the high of 158.47. She is trading out at 149.58, and that is on Panera Bread. You've got some volume in it today for sure, 1.1 million shares in the first 43 minutes of trading. That's going into 3.4 million shares. So pay attention to Panera Bread. If we go take a look at Apple, see what Apple is doing, where she is trading at here. So I pull that up on my screen. Apple trading out at 572.91, having volume most certainly today. If we take a look at the volume on Apple so far today, 12 million shares, taking out a couple of swing points. The swing point from 2 trading sessions ago, July 23rd, that had 17 million shares. You've already done 12, almost 13 million shares today. The A to B equals CD down. It completed a 1 to 1.618. Small A to B equals CD down. Apple could be setting up a large A to B equals CD down. When we take a look at large A to B equals CD downs here, folks, when we're looking at, if you're watching us on Tiger TV, or maybe you're listening to us, an easy way to listen to us is just simply by going to tfnn.mobi. If you're taking a look, and this show here is archived on Channel 10, so if you're listening on the radio, we absolutely appreciate you doing that. You can get the archive of this show. You'll be able to see the charts that we're looking at. And we are looking at a Gartley sell pattern that completed here on July 10th. Now, in a Gartley sell pattern, you have basically, I'll say you've got 4 areas of a normal move if the Gartley pattern succeeds. That first area that you're looking at is the 0.618 retracement of the entire A to D leg. That means from the low of May 18th out at 528.66 all the way up to the high on July 10th out at 619.87. That says 563 is a normal retracement. What would that be doing? Going back to the June 28th swing point, that swing point is what Apple is trading inside right now. Trading inside there, that swing point has 10 million shares. We've already done 13, almost 13 million shares here today. So it's got enough to really blow through that swing point. What's that mean? You're coming into a swing point with volume. Well, you can go take a look at the next swing point that's out there. That's going to be at that 0.786 level. Now, that is June 4th. That is the low of 548.50. Up to the high of 567.50. Has not made it all the way down there. That swing point only has 19 million shares. So you're taking a look at the 0.618 and the 0.786. Those are your first 2 areas where you would see a normal Gartley pattern move back to. Where's the third area? That's that 100% move of a move. That would take Apple down into the lows, going all the way back to May 18th, out at the 528 level. And if we take a look at the final destination, the final potential destination on any Gartley pattern is that the D point, the original D point, where that 0.786 retracement was, that's that July 10th high. What that really does is sets up the new C point of an A to B equals CD down. The A point, April 10th high, the B point, the low on May 18th, the C point, which was that Gartley sell area, that was July 10th, that would set up 504.95. That would be the full completion, the ultimate of every Gartley buy or sell pattern. In this case here, this happens to be a Gartley sell. So we'll be paying attention to Apple and see how she continues to handle price today. If we take a look at Priceline, whoosh! Priceline taking it in the shorts here right now. PCLN is the ticker symbol, down 4.5%. PCLN. On Priceline gapping down with volume. Let's go see what Priceline is going into. Let's get rid of all of these notations here on the chart. So we've got Priceline moving in a sideways box consolidation range, doing it ever since you had that institutional selling come in on May 10th. You had the institutional selling. You had 3.1 million shares. That bar has created the consolidation, the supply line that has created the sideways trading range. The high of this sideways trading range really being July 3rd up at the 695 area. The low being boxed out around June 4th down at that 603 area. If we do take a look at what Priceline is doing, Priceline has 447,000 shares coming against the swing point area that has 1 million shares. So that's the one that it's attacking here. Trading inside there, that is July 12th. It's got volume, and the question is Priceline now going to finish below that area? That being 632.76 here at 639.01. Where does that set up Priceline moving to then? I would say Priceline would then move back down into the bottom of that sideways range all the way back to June 1st out at the 604 level. What that is also doing, it's coming against here the really last sign of any strength out here. Let's see. Yeah, the last sign of any strength. Now, if you take a look at Priceline, Priceline here, gave you the indication that its move to the highs was over. Did that on April 10th when it made a bearish engulfing, followed up on the next trading session with a confirmation. Priceline did go back up and try to test that bearish engulfing. Couldn't get back up above that support. Candle-wise, it was going against 2.3 million shares. When it got up there, it had 1.2 million shares. Not enough juice. Now really setting up an A to B equals CD down. But first, it's going to have to take out the last sign of any kind of it's like I had a total brain fart there. The last sign of strength out there. Thank you, Steve. And that last sign of strength again coming in on February 28, 2.7 million shares. So this area here that it's traveling in, you've got this sideways consolidation range. It'll take a bit to bust through there, but right now really coming in to that 2.7 million shares. Let's see, today so far 450,000 shares. Actually could get the volume in this today, so we'll pay attention to that. Buffalo Wild Wings. Buffalo Wild Wings have been some problem with their hot sauce. Down, it's down 11% right now, off $8.65. BWLD. And, gapping down with volume. So now you got the institutional selling inside this. We saw institutional selling inside Buffalo Wild Wings on April 24th when it moved down with 4.4 million shares. Broke through the, right now what it's doing is coming right into its sign of strength. The last sign of strength that Buffalo Wild Wings had goes back to February 7th when it gapped up on February 8th with 6.5 million shares. You're trading inside there right now, doing it with 2 million shares with only 49 minutes of trading. 877-927-6648. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Master Show. I am Steve Rhodes. Tom is out for the day here, traveling, and he'll be back with us tomorrow. And that means lineup changes here. Following this show, we're going up to Newton, Massachusetts, to Basil Chapman. And it's wonderful that we've got such a deep lineup here. Today, Basil is going to be doing a back-to-back doubleheader. He's going to be filling in for Larry, who is off today. So you're going to have Basil from 11 till 1. That is a beautiful thing. Then we go to Daryl Martin to the Diagnostic Trading Hour out in Dallas. David White back here from 2 to 3. Ken Shreve from 3 to 4. I'll be subbing for Tom from the 4 to 5 session, warming my voice up for everybody that's going to be attending who was in the Tiger Dollar promotion program that we had over the early part of the summertime. So I'll be filling in for Tom from 4 to 5, and then I'll be doing that program from 6:30 to 8 for all those that participated. Kate Stalter will go ahead and take things from there from 5 to 6 today. We're taking a look here at the euro if you're following along on Tiger TV. And the euro here, that's really where the bounce came from. And the euro doing nothing so far more than a dead cat bounce. A dead cat bounce we're looking at is really off of the 30-minute chart. That's what I've got up on my screen. The swing point high in the euro coming in at 3:30 in the morning on July 19th. Swing point low coming in yesterday at about 12:30 when the euro was down at the 1.20411 level. You can see right now the euro has made that 0.382 retracement. gave us a bearish engulfing sign. We've got the follow through coming in. Did that in the last half hour as we came into the 10 o'clock session. As long as this closes lower, which it looks like it will, giving you confirmation. What's that set up for a pullback in the euro? And that pullback would be where? To sweet 618. The 618 area would be 1.20. I'd say right around, 1.209 would be the 0.618 area. Watch to see what kind of bar as the euro comes back into that area. If it comes back with a wide-ranging bar, it'll come all the way back to where it broke out at about 3:30 this morning out at the 1.205 area, as everybody in Europe is trying to, at least the ECB-wise, trying to push out euros. Folks, are you ready to sign up and buy some? No, I didn't think so. So that means that the euro, we haven't seen the lows on the euro out here. In fact, if we go ahead and put the monthly chart up here on the euro, we'll take a look at the monthly chart. Let's see what kind of pattern I have drawn in here. I didn't even know I had a pattern out there. We're taking a look at the 1.272 butterfly buy pattern setting up right around the par level. And you're trading at 120 right now. You can also see what the euro is doing on the monthly chart. What is it doing? Trading inside June 30th, 2010. The high of that bar, that swing point, 1.24660. The low has not been tested. The low is 118,754. That low wants to be tested, likely sooner than later. Let's go take a look at... what did we want to take a look at? Caterpillar. Let's go take a look at Caterpillar. Caterpillar out with earnings this morning. If we take a look at, give me a second here, let's see what Caterpillar actually did. Earnings-wise, you had Caterpillar volume revenue $668 million versus $675 a year ago. So on the top line, as you would have expected, Caterpillar struggling. Why? Most likely because of currency translation going out there. King dollar. So here is a great example of folks talking about the dollar being weak. Now you're seeing what happens when the dollar is strong. And that's why we're saying as the dollar it gets stronger, it's going to be difficult for the markets until that correlation, the directional correlation, disappears out there. If we take a look at their earnings here, I know. Wait a minute here. Cat Financial Q2 revenues. So his Q2 revenues were down. It was the 6-month revenues were up slightly, but really it is the Q2 revenues that paint the picture, because King dollar is going to get stronger, euro is going to get weaker out there. You had profit of $104 million versus $107. Caterpillar popping up nicely this morning and giving back all of its gains. Trading out right now at 83.52. If we go ahead and take a look at Caterpillar on a long-term chart out here, Caterpillar going into a long-term bearish mode, doing that in April a few months ago. Why do I say that? That is when we had that on a monthly basis. We had the 50-day cross through the 200-day. Now, when you're using the 50-day, it's really taking a look at 50 sessions, 50 candles going back, so you need to adjust that if you're using different time frame charts out here. That's, in fact, what I have done on the monthly chart out there. So if you are following along at home and you put up a monthly chart and you put in a 50-day moving average, make sure that the conversion is being done either by your software or by yourself. 877-927-6648. Dow up 68 points. S&P flat. Composite down 12. Apple down almost $30 right now. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I'm Steve Rhodes. Tom O'Brien is off today, but he will be rejoining us tomorrow. Thanks for joining us here at the Money Masters. Let's go to Bill in Sarasota. Bill, thanks for calling. Thanks for holding.
Good morning, Steve. Thanks for taking my call.
My pleasure. How are you today?
I'm trying to get better every minute.
Oh, that's wonderful. I love it.
I called because I'm long the TZA right now.
Okay.
And I'm trying to correlate that with the IWM.
Yes.
I want to add to it, but if we're not going to get past the June 26th level, I probably won't. If we're going for the June 4th level, I definitely want to.
Yes. So on the IWM, so let's take a look at this from a number of different perspectives. The first here is I'm taking a look at the Russell 2000 futures contract, and the reason I'm looking at that here is the Russell 2000 futures on July 12th had a hammer candle as the market moved down into it, and that low there was 774.80. That hammer candle really should have acted as a strong support area. Excuse me. The Russell 2000 futures on the July 23rd level broke that hammer candle. That said you're going to have lower prices. Now, what the Russell 2000 did yesterday was it completed at least the first level of its move down, completing a 1-to-1 A to B equals CD and stopping at the .618 retracement. That was at 763. What the Russell did this morning is it bounced back up very close to what the hammer candle used to be support. And as you probably know, Bill, once you have an area that is support and you bust through it, it becomes resistance.
Yes, right.
And so the Russell 2000 got up to a price point of 773. The actual low of that hammer was 774. So that would have been your area to have added to it. Okay, that's what I would be taking a look at as a possible area to add to it. So now it's trading down. You know, you want to kind of wait to see how today's trading session here goes, because you have had quite a move down here, and there is that possibility, of a snapback. Now we're going to go from the Russell 2000 futures, because that kind of gives you a gauge of what's been going on overnight versus just taking a look at the index out there. Now, what I do think is that the Russell 2000 futures contract here, and probably by, I would say, August 3rd, anywhere between July 30th to August 3rd, look for the Russell 2000 future contract to go close the gap. That is, oh no, the gap is closed. Okay. Just take a look at, to get back towards the swing point from June 4th, or at least the 0.786 area, that is 749.30. Now let's go over to the IWM. So let's go take a look at that. That's the ETF that you are using as a benchmark. And let's see if we can find some type of similar setup there. So if we take a look at the IWM, trading out right now at 76.65. See, the problem with the IWM is it didn't give you that. You could use really the same area. So you'd be using July 12th. The low there was 77.59. I would think that might be the area where you would be taking a look at possibly reloading. It didn't get, just like in the Russell 2000 future, it didn't get all the way back up there. Got up to a high of 77.38. Now what you'd want to do, no matter what, is if the IWM for any reason starts to get above or closes above 78.03, that is where you have your most recent gap there. Then it could easily move up into the July 20th low at 78.81. Once you get inside a gap, it can go out there and fill it. So that's really what you're looking for as your benchmark there on the IWM. So somewhere right around either to add the 77.59 up to the 78.03 level. And, if you're in a winning position right now, that's also a good thing.
I appreciate it, Steve. Thank you for your help.
Oh, my pleasure. Thanks for calling.
Bye-bye.
Okay, let's go take a look at what do we want to take a look at? Well, you know what I'd like to take a look at, folks, here, and this often, and the reason why I want to do it is because we certainly don't do it here very often at TFNN. We take a look at the NDX, or we take a look at the IWM, or the diamonds. When I talk about the NDX, we're taking a look at a weighted ETF out there, right? So it's weighted. There is an equal weighting of the NDX ETF that is out there, and that's what we're going to go take a look at next. That ticker symbol, if you wanted to pull that up on your screen, is QQEW. QQEW is the ETF that would be the it's equal weighted. Okay, so it's equal weighted versus weighted, meaning Apple right now represents some large number inside the NDX 100. In this case here, Apple would be the same as any of the other 100 stocks that are inside there. So you say, Steve, why do you want to pull this up? Well, I want to understand, when you're taking a look at this is really giving you underline what's going on inside the actual NDX 100 when you take a look at that basket of 100 stocks. And before we went to the last break, we were taking a look at Caterpillar. I had the 50-day and 200-day on the monthly chart up there. Now let's just take a look at the NDX 100 on the daily chart here. And we're going to go ahead, since it's the daily chart, we're going to go ahead and put the 50 and the 200-day exponential moving average out here. So the first one that pops up is not the 50. Let's go ahead and put the 50 and 200. Here we go. So you got the 50 and 200 out here. Now, I'm going to compare this, the equal weighted ETF, and go take a look at the weighted ETF, the NDX 100. So what you are taking a look at here, now this is on the daily chart, and what you did have happen a couple days ago, maybe it was yesterday, I really wasn't paying attention until this morning here. You can see that you had a 50-day crossover of the 200-day, folks. That is giving you a bearish signal, especially when you do this on a daily chart out here. And if you go take a look at this, We'll take a look at the equal weighting structure out here, and you go back into the 2008 time frame. You got a crossover of that right around the January 2008 time frame. That would have been the time to have been very, very cautious. You would have been out of the equal weighted, perhaps the NDX at that stage, and you can see how that 50-day, when it crosses through the 200, you have to pay some respect. Now, it's a lagging indicator. I prefer that you use leading indicators such as candle patterns, A to B equals CD. But certainly what you can use as your insider trade or anything else is going to be the lagging indicator, giving you the momentum of the trade that is going on out here. So if you take a look at that, you would have created staying out of a lot of pain out here. So I bring that to your attention because this is because you've just, you had a crossover of this going back into the August lows recently here. I do believe that where our markets are going to be headed to are back into those August or really October 4th low swing point that is out there. But you can't see on the equal weighting here, you did have a crossover versus if we go ahead and put the NDX, we'll just go ahead and put the we'll just go ahead and put the Qs up here, and I'll put the exact same tool on this. You'll see that has not had the crossover. So sometimes I think it's always good to take a look at both the equal weighted index as well as the non-equal weighted. I should find a better way to say that, shouldn't I? So let's go here and take a look at the NDX, or the Qs. We'll take a look at the Qs versus the index. We'll do the same system here. We'll go take a look at the 50-day versus the 200. And you can see in this case here, not even close. If we go take a look, when I say not even close, I'll give you the actual price points of where those are trading at. And if you take a look at the 50-day on the NDX, you're at 63.51 and 61.73 on the 200. If we go all the way back into that October time frame, let's see who gave us the signal first, if there was one. This gave it in about January of 2008. So February 1st, 2008 was when he had the signal. Let's just go back and take a look at it, because I don't know what the answer is, but the charts will tell us. So you had one give us a signal. The NDX gave you the signal there to be out or short. And on the equal weighting, it gave it to you January 11, 2008. So you did get the signal here sooner on the equal weighting index out there. You might ask me about, there's other sectors out there where I know that we had the cross-through yesterday on the equal weight, that equal weight being the material sector. I believe that's the XLB inside the S&P 500. So if we go put that up, that is the RTM, is the actual ETF for the material sector on the equal weighting side of the S&P 500. So we'll put the RTM up here on the screen. And don't trade these. The liquidity inside these is not there. But what you do want to use these for, folks, is gauges as to what's going on inside the sector itself. So again, let's go ahead and put the 50-day, 200-day on here and see that crossover. Did we have that? No, it looks like we didn't have that. I thought we did. We did. Well, I apologize. We did have it. It's right in front of my eyes. I just wasn't really paying attention. So you had the crossover inside that material sector here on June 1st when you had the 50-day cross back through that. Let's go take a look at the XLB. I believe that's the material sector, isn't that, folks? I don't have my list here. Actually, I can go take a look here real quick and just make sure that is the material sector inside the S&P 500. The XLB is the material sector. So let's go see what the XLB looks like using that same lagging tool out there. So if we take a look at the XLB, we're going to put that same moving average on my screen right out here. Take just a moment to do that. And you can see here, there we go. And on the, you also had it on the, okay, so you did also have that negative crossover here in the middle of May 18th. So the S&P sector, the XLB, the material, showing that it is in bearish mode, full-blown bearish mode out there. Let's go take a look at gold, see what gold is doing out here. You've got gold trading up $22 and change here. The gold contract Give me a moment here to pull this up. So now let's go take a look at gold, not the IAU. Let's go take a look. There we go. We got the gold contract. And what I'm going to do here for you folks, you can see the gold contract trading into actually the 50-day exponential moving average, which has acted as resistance here for quite some time. It's really the 200-day that's acted as resistance, really going all the way back to May, the early part of May 3rd, 2012. Each time gold has gotten up there, in this case here, the 50-day is 1624 on this. But there really is another pattern that appears to be setting up here on gold. I first took a look at it yesterday. When you take a look at this, rising bottoms trend line, this black line that we've got coming across here. If we actually take a look at gold, I'm going to go ahead and erase a couple things off here just to make it a little bit easier for you to see as I add lines. In fact, we'll go ahead and get rid of the moving average, since we know that that had a 50-day crossover, setting gold into a potential long-term bearish pattern. But let's go take a look at, let's remove that. And let's go take a look at what else gold is doing here, setting up a triangle wedge here. So if we take a look at that, we're just simply going to start here. I could probably start all the way back here if I wanted, maybe even right up there. Let's do that. There we go. So there is, you can see this little triangle, the symmetrical triangle wedge, really coming all the way back in here. So here's another way to take a look at what is gold doing. So gold really trying to break out of that symmetrical wedge here. Now this pattern here, folks, when it does resolve itself, oftentimes if you do bust out of here, then what you've done, that would say that gold has put in a low. You can see here today, that is what is stopping gold in its tracks right now. If this area here holds, what you would expect is to watch gold travel down, into this cone. At some point in time, it's going to bust out of here. But if you do bust out to the upside with some type of conviction, what does that set up? Well, it actually sets up, if you go from the highs to the lows, and you take a look at a couple of different areas out here. The first place that I would start, when you take a look at retracements, I would come all the way back to February 28th, that high all the way down to the low recently that was put in on May 17th. That would get you into the 1691 to 1735 area. That's the 618 to 786. You could also go ahead and take a look at the highs from 1923, not the year 1923, the price point of 1923.70 on September the 6th, 2011, all the way down to the lows. Let's go take a look at what the retracement level is there. So you have at 1678 to 1691, you've got a 0.382 retracement off the major high to the low, and then you have another retracement at the 618 level, right in that 1691. So if gold can break out of this symmetrical triangle wedge that we have here, you can look for gold to move up to 1678 to 1691. It would be moving in the opposite direction of where gold has been traveling. If we go take a look at what else do we want to take a look at out here? Let's go take a look at silver. Let's go see what silver is doing. Silver up 27 pennies here right now. Really doing, and actually silver, I'm going to go ahead and get rid of a number of these patterns that are up here on the screen. Just change it up. It's always good to come back at a chart and take a look at something new that might be forming out there. And if we take a look at silver, you could be setting up really the same pattern out here. We would go from the rising bottoms. You'd be going off of the low where it did test a previous swing point. You'd be going off of June 28th. Your next touch point would probably be the low of July 12th. And if we take a look at the wedge here on silver, silver probably would be the first one to give us the indication. You can see silver now doing really the same thing that gold did here today. As silver moved up, it got up into that area. Right now you can see this cone here, this symmetrical triangle here is getting narrower and narrower. That is why gold and silver have been trading in a very narrow banded range. 877-927-6648. Got the Dow up 49 points, S&P's down 3, Composite down 13, small caps up 2, Apple down $30, $29.50. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Got the Dow up about 21 points right now, heading to red territory here. You've got the Dow, the S&P off 6 points right now, composite off 20, small caps about to go red here. New York Stock Exchange trading out at 75.74. New York Stock Exchange off 16 points right now. If we go take a look at what's going on inside the ETF structures out here, let's see what kind of volume we've got in this move here today. Let's take a look at the SPYs first. So the SPYs so far today doing 40 million shares. We have been trading for about an hour and a half, short of an hour and a half. So you've done 40 million shares. Now I really got to do the math on that. That is going to be about a couple hundred, potentially 180 million shares or so. Somebody can check my math, but what we can say is it is coming into the swing point with volume. It was doing that yesterday. The swing point we're looking at, first swing point that we're looking at is July 12th. That had 143 million shares out there. You came into it yesterday. You closed inside it with how much? 173 million shares. Right now, today, you've got accelerated volume. So, if you did the straight line math, I know that it's certainly more than 173 million shares. Also going into 168 million shares from June 28th. So, if you're from a bullish standpoint, you want to see it actually get down and test July 28th, June 28th, I should say, but on lighter volume. That has 168 million shares. Bearish, you want to see it close inside 132.99 with more than 168 million shares out there. Now, if you take a look at the actual indexes, and we'll go ahead and do that here for a moment. That's the New York Stock Exchange. Let's go put the Russell 2000 up here. Let's put the small cap. So we take a look at the Russell 2000. And so the one thing that I want you to note on the Russell 2000 here is I want you to note that on the way down, on this move down off of the most recent new moon that we had out here, off of July 19th, you've had two gaps. So what you're looking for here is you're looking for the potential of a third gap, a three-gap play. That would be an exhaustion gap. That would be the point at which you would want to take a look at closing out your short position and flipping and going long. And so depending on how our market here finishes today, that could easily happen tomorrow. Now, in order for a three-gap play to truly work, folks, the third gap needs to be bigger in dollars and percentage than either of the first two gaps up there. If you got a smaller gap, doesn't qualify as a three-gap play. So that's something, you'll want to pay attention to. And I suspect that where the Russell 2000 wants to move back down into is into the June 4th swing point. If we just simply take a look at retracement from June 4th up to the high that was put in on July 5th, you can see that yesterday it got down to that 0.618 area. Typically, it is an area where you would see some type of reversal. You saw a little bit of that so far this morning, but the reality is the crude reality, and we're not talking crude oil. The crude reality is really all about the euros, and until that day comes when you want to buy euros, folks, and that's not going to happen anytime soon. Why? Because the PR machine of hook 'em, catch 'em, and cook 'em is what they have going out in Euroland. And, we saw some downgrades. I saw somebody come across something with regard to the downgrade of the ESFS. That's the European Stability Financial Fund, something like that, which has never been funded, but they always use that as the point person that how they are going to solve all the problems out there. It's a beautiful thing, folks. They are not going to solve the problems anytime soon out there. So keep your belts buckled and stay tuned because we're going to be going to Basil Chapman. He's going to be doing 2 hours for you. Thank you for joining me here today. I'll be back with you today from 4 to 5 as I fill in for Tom, and Kate Stalter will do 5 to 6. We've got Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4. Thanks so much, folks. Have a wonderful day. Look forward to seeing you soon.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade,